So it's Thursday. We got some action in the We got some action in the commodity markets for sure, natural gas included. You have oil making big moves today after there was a surprise draw in oil yesterday. So I got the NADEX platform up here. We're looking at the natural gas contract. We're looking at the July contract. And we're trading right at $3, which is going to be nice for this setup. So it's 10:22 right now. We're going to get those EIA numbers at 10:30 a.m. Eastern Time. We get those every Thursday for natural gas. And we've seen some volatility this morning, going from about 296 up to 3. And so what we're going to look at is potentially a volatility trade. We like to maybe set up both sides of this trade, look for a bullish spread, look for a bearish spread, and really we're just looking for some volatility on the inventory numbers that we get in about 7 minutes from right now. So Tom, I pulled this up ahead of time, and what's nice here is that all of the different time expirations are going to be able to choose a $3 spread that's where they begin at, which is nice because we have natural gas trading right at 3. So for instance, we'll pull up the 11 a.m.s first. These expire at 11 a.m.s. They're going to be the shortest time frame. And we're going to have 20 cents to the upside on our bullish spread. We're going to have 20 cents to the downside on our bearish spread. And again, as we say it, oil basically right at $3. So you're going to have essentially no intrinsic value on either of these.
Sweet.
Yeah, so the bullish spread's going to cost us about $11, which represents 11 cents above 3. And on the bearish side, it's going to be pretty similar. And we're just varying a little bit where you can see natural gas is slightly above 3. So maybe that's the difference here. And we have a bid-offer spread. But you're looking at about $20, give or take, as we oscillate around here. Right now, it'd be $19. So $19 represents 1.9 pennies, because this is ticking in basically tenths of a penny. And so you're looking at about $20, which would mean you need about 2 pennies of movement from $3 in either direction represents your break even, okay? So that's the 11 amps, which is nice. Now jump to the 12s. What's going to be cool here is same exact prices in terms of there's your bullish spread from 3 to 320. That one, instead of costing you about 10 or 11, is going to cost you about 14 now because we're adding an extra hour. That's the only difference. That's the only variable that changes, which is cool because normally there's so many different things that go into the price of an option, whether it's time, it's price, it's everything. These are identical except for one thing, which is you have till noon as opposed to 11. And you can see that now as we're ticking up again a little bit, we're almost at 301 now, but the bullish one costing us about $14 or $15, bearish one costing us a similar 8, bearish one no intrinsic value at all. And so the noons are going to cost us about 22 versus 19, okay?
Boy, so that's not bad.
It's not bad for that whole extra hour. And then one more final one, let's jump to. Now what's interesting here is we're going to have the 8 till 2:30s, okay, that provide you a 40-cent spread, but I'm going to jump right to the dailies, which get set basically last night, because those are a 50 cent spread. And what you'll see is, and just to jump to it for a good, because this is a great, example. Here's your 230 spread with exposure to 340 on the upside. Here's your 230 spread with exposure to 350, and they're trading identically. Okay, so if you were going to buy this spread, you'd be a fool to ever lock yourself in with a ceiling at 340 when you can buy the same exact trade with a ceiling to 350 if you ever got a move. And, you know, the reason why they're priced so similar, excuse me, is because the odds of that are very slim that you'd ever get a move above 340.
But it's not zero,
but
right?
Exactly. It's not zero, and if you don't have to pay for it. So with that in mind, we're just going to pull up these. Let me jump back to it, the larger 50-point ones. And what's nice again is that these, now they add 2.5 hours. Okay, you have till 2:30, but they also add a little bit of price difference, as in you have profit potential for 50 cents as opposed to 20. And so looking at these trades, you're looking at about $33 to make that, which would be 3.3 pennies of movement away from that $3 is what you need. Not bad in terms of, in general, you know, and again, you can always make these one directional or the other. We're right at $3, so that's what's nice. You just want to be bearish, you only got to put up 1.5 pennies, basically $15. We'll see. 2 to 3 pennies of movement is not that much when just looking at that chart. We've had 4 pennies of movement just prior to that number, just this morning alone.
Exactly. Stay right there, folks. Tommy and I come right back with those gas numbers. We have the Dow Industrials right now down 188. NASDAQ's up 63. S&Ps are down 20. Come right back. Welcome back, folks. Dow right now is down 172. You get the NASDAQ off 54. S&Ps are off 17. And what do we got with natural gas, Tom?
Yeah, quite a number. So I see it up there. We have a stockpile rise of 91 billion cubic feet. Median estimate was a rise of 86 billion cubic feet. So I got the chart up there. Natural gas spiking a bit lower. We were trading at $3 on the dot prior to coming into that number, and currently trading $2.97. So we dropped about almost 3 pennies on those numbers.
That's pretty cool.
Yeah, and you know, the trades we were looking at set up there was anywhere between just, you know, under 2 pennies to about just over 3 pennies, and that gives you exposure until 230. So as in, okay, perfect. I see you have the numbers up here. So yeah, it seems like estimate was about 86 billion cubic feet, came in at 91, and they have the breakdown across the different regions in terms of the East, Midwest, Mountain, Pacific, and South Central. Interesting. Getting some.
When you're looking at that, I'm wondering, you see when you look at that, you got the mountain and the Pacific, like it's very small compared to the rest of the country. It's like, is that where the weather's coming in, that people need more natural gas for air conditioning? You know what I mean? Sure,
yeah. I have my AC guy showing up to my house either tomorrow or maybe Saturday morning. We got to get it fixed, man. I need some cold air because that Florida heat is coming, so I'll be one of those people.
Getting ready for the summer. Hey, today's the first day of summer.
It is. Summer solstice, right? You got it, man. Totally. So we'll check back on those natural gas numbers, jumping back to the chart one more time, hanging at about 297.70 right after that number. And we'll see, as we normally see on those numbers, natural gas definitely jumps around. And the nice thing about some of those trades, and we tend to gear towards the noons, because it's nice when you get some exposure for an hour and a half. I mean, oil was a great example yesterday in terms of the movement that we got from oil even after the 11 a.m., Tom. I'm not sure if you pulled it up, but oil eventually did rise yesterday after a little. Yeah, it's like those numbers, that draw eventually did play into the market. And I'm just going to pull up the chart as we pull it up, because that was an interesting, the way those EIAs played out yesterday. So I'm looking at the chart right here. Here's your 1030 number on the bar chart. On the chart, we're trading about 65.60. Oil oscillating a little bit, but look at that. Right at 11 o'clock, we're trading at 65.50, and by the span of 12 o'clock, we were trading at 66.35. Quite a move, and it took that half hour for it. But guess what? What happened at 12? Market fell apart from 66.30 down to all the way 65. That oil market, man. As we were talking to our man Kevin Hinks, talk about volatility.
Big time.
Yeah. Welcome back, folks. Tommy O'Brien with Tom O'Brien. We got the Dow negative 143, NASDAQ negative 49, S&P's negative 14. So we're nearing the 11 a.m. end of the program, Tom. Let's jump back to natural gas, check in on the volatility. So we saw that spike lower right off of the inventory number at 1030, and from there we've just kind of been hanging around at 298. So what's interesting is the 11 a.m. expiration spreads we're looking at. You needed about, we'll call it 2 pennies.
2 pennies.
Yeah, it was like 1.9 pennies. You needed 2 pennies, basically. And we're close to that level, coming in with 5 minutes left in the 11 a.m.s. You only needed about 2.3 pennies in terms of $23 for the noon. And for the 230s, you needed about 3 to 3.5 pennies, depending on where that's set up. So we'll see. But like we looked at for oil yesterday, man, you can always get some action throughout the day, especially with the type of action we've been seeing in these commodities. Natural gas, just to pull it back, you don't have to go back that far in terms of just volatility across the board on that chart. So we'll see. Kind of a tame market in the last half hour, but not a bad trade in terms of you get a 2-penny move right off the bat, and 2 pennies was kind of essentially, you know, very little premium in those products this morning, which would have been nice when you see the type of move you need is not too dramatic for the move we got. And that was not really too big of a miss on those numbers, too, in terms of...
And what's so clean about that is that we had, of course, the 11, the 12, and the 230s, all at 3.
Yeah. So they all line up with the same price.
How much time do you want?
It's nice when you literally get to see how much does that hour cost me. Well, guess what?
Yes.
We know exactly how much that hour costs you, and that's where you get to make the decision. Is it worth it? Is it worth it? You know, and you get to just, it's easily quantifiable. Do you want to pay for that extra hour till noon? Do you want to pay for the extra hour till 2:30? And you get to make those decisions depending on your market bias. Pretty cool.
Get over to our website, folks, at TFNN, hit the NADEX platform, bring it up, and that's why we go through these so you can see how these different contracts act and react.
And we got OPEC tomorrow, man. Oil. That'll be a cool trade. We'll see what happens. Awesome, man. Okay.
Okay, have a great one, man. Have a safe one.
Thanks, man. You too. Love you. Okay.